Okay, what's up, tycoons? What's up, traders? Appreciate y'all watching the video today. We're going to go over support and resistance, and we're going to chart up the NASDAQ 100 futures. And you can use these charting basics on support and resistance for both cryptocurrency, the stock market, forex, as well as other trading pairs. Okay, but before we do this, we're actually going to go into a brief presentation on support and resistance, so that way you understand what it is, okay? So make sure to smash the like button, subscribe to the channel. We'll jump straight into it. Support and resistance are two foundational concepts in technical analysis. Understanding what these terms mean and their particular application is essential to correctly reading price charts. Prices move because of supply and demand. When demand is greater than supply, prices rise. When supply is greater than demand, prices fall. Sometimes prices will move sideways as both supply and demand are in equilibrium. Like many concepts in technical analysis, the explanation and rationale behind technical concepts are relatively easy, but mastery in their application often takes years of practice. And this is very true, okay? Screen time is the biggest advantage that you can get. And that's the best thing you're going to get is experience in screen time. That will help you out tremendously. But the key takeaways, right? So technical analysis, use support and resistance levels to identify price points on a chart where the probabilities favor a pause or reversal of a prevailing trend. Support occurs where a downtrend is expected to pause due to a concentration of demand. Resistance occurs where an uptrend is expected to pause temporarily due to a concentration of supply. Market psychology plays a major role as traders and investors remember the past and react to changing conditions to anticipate future market movement. Support and resistance areas can be identified on charts using trend lines and moving averages. What is support? Well, in a downtrend, prices fall because there's an excess of supply over demand. The lower the prices go, the more attractive prices become to those waiting on the sidelines to buy the shares. At some level, demand that would have been slowly increasing will rise to a level where it matches supply. At this point, prices will stop falling, and this is support. Support can be a price level on the chart or a price zone. In any event, support is an area on a price chart that shows buyers' willingness to buy. It is at this level that demand will usually overwhelm supply, causing the price decline to halt and reverse. And resistance is the opposite of support. Prices move up because there is more demand than supply. As prices move higher, there will come a point when selling will overwhelm the desire to buy. This happens for a variety of reasons. It could be that traders have determined that prices are too high or have met their target. It could be the reluctance of buyers to initiate new positions at such rich valuations. It could be for any other number of reasons. But a technician will clearly see on a price chart a level at which supply begins to overwhelm demand. This is resistance. Like support, it can be a level or a zone. Once an area or zone of support and resistance has been identified, those price levels can serve as potential entry or exit points because as price reaches a point of previous support or resistance, it will do one of two things: bounce back away from the support or resistance level or violate the price level and continue in its prior direction until it hits the next support or resistance level. So we've got that out of the way, right? We're going to head over to TradingView now. And what I recommend everyone do is you start off on larger time frames, right? So we're starting here off on the weekly chart, and I've chosen some support and resistance levels. Now, what I've done and why I've chosen these levels is you can go off of wicks or you can go off the body, right? So if you're not familiar, this is what a candlestick looks like, right? So you have a wick here, then you have the actual body of the candle, okay? And then you have another wick down here. So those are the wicks right over here. And then these is the body, okay? So you have in a bullish candle, this is your open, and then this is your close. And on a bearish candle, this is your open, and this is your close. So there's not one perfect way to do it. You can use the bodies or you can use the wicks. What I like to do is really just focus on multiple touches. Okay, so if we zoom in a little bit on our weekly chart, we can see here that it's touching these bodies and these wicks a lot right at this level. Okay, so we have multiple points of contact. Same thing over here. We have multiple points of contact right here. Multiple points of contact. We have the body, we have the wick, we have two bodies over here. Over here we have multiple points of contact, right? So that's really what I'm looking for when I'm looking for support and resistance, is I'm looking for multiple points of contact in an area where it's been touched a lot. Okay, and what we'll do from here is by the end of this video, you'll see how by using support and resistance, you can actually give yourself levels to trade off of and become a level to level trader, whether it's day trading or swing trading. It's going to be very, very efficient and help you out a lot. And what I recommend doing is color coordinating your support and resistance levels, right? So our weekly time frame, and the higher the time frame, the stronger the level of resistance or support that it's going to be. So now we're going to zoom down to the daily chart, okay? And we're really going to go in between our zones now and try to find some areas of support and resistance. Okay, so we'll start off here on the top and we'll zoom in and we'll go ahead and take out our horizontal ray over here. And we can see that we have some resistance right over here. Okay, so we're going to go ahead and slap this baby on. What we'll do is we'll change our color now to yellow. Okay, so yellow is going to be our daily time frame. All right, so we have some support right here. We have a few touches of the candlesticks right here, multiple times over here. What we can do is we'll come in between here and we'll try to look to see, do we have any support and resistance? I like this one right here, right? So we have the body right here. We have a body right here. We have a wick. We have a body right here. We have a body right here as well. So this is a nice daily support level that we've bounced off of and moved around a few times. Okay, we'll come down in between here and we'll really just continue to do this on multiple time frames. Okay, so I'm going to go ahead and chart up some more support and resistances on the daily chart, and then we'll zoom down to a smaller time frame. So now what we have is the 1 hour chart. Okay, and we have our daily support levels and resistance levels here in yellow, and we have our weekly support and resistance levels here in white. The next ones we're going to do is chart up the 1 hour chart. Okay, and we're going to come in here and we're going to look for some support and resistance levels. Okay, so we're going to start charting in here. We can see we top out up here, right? So we have some resistance up here. We'll change our hourly over here to red. Okay, so now we have white, yellow, and red. Okay, red is going to be the 1 hour. So I'll go ahead and chart up some support and resistance levels on the 1 hour chart, and we'll be right back again. Now we have our 1 hour time frame charts up here. We have our support and resistance from the 1 hour time frame, the daily, and we also have the weekly. And we have them color coordinated, so that way we kind of know the strength and the varying level of strength within those. Now, what's cool about TradingView, okay, is you could come over here to indicators and you can type in all, and it'll pull up all candlestick patterns. Okay, we'll go ahead and put this on here. All right, and now we have all patterns on. We'll go over here and we'll adjust some of the settings real quick. And we're going to go label color bullish. We're going to change this to green. We're going to put no detection right here, and we'll put both on. Okay, and this is going to show us both bullish and bearish candlestick patterns. All right. And what's really, really nice about this is you can come down to the 5-minute chart now. Okay, so now we're on the 5-minute chart and we're using the same support and resistance levels from our larger time frames. And what we're going to do is we're going to combine that with the all patterns and really give ourselves some premium entries and exits. So we're zoomed in here now on the 5-minute chart. We have our candlestick patterns here, okay, letting us know and just giving us some added fuel to the fire to really help us with our trading journey, right? So what we're going to do is we're going to look to become level to level traders. So particularly look here on the 5-minute chart, right? So we can trade from this level here up to this level. We can look to capture this move. What do we get? We get a bearish engulfing, or bullish engulfing. Sorry, that's what BE stands for. So we see we get a bullish engulfing right here to our major level. All right, to our 1 hour support and resistance level. The next candlestick opens above and has a nice push up, right? So this can be your confirmation here, right? So you can have the bullish engulfing, then you take an entry here, and you can have a stop loss just below the candlestick here and look to capture this move. That's a good ratio, right? If we take out our measuring tool here, okay, we can see that's a decent risk to reward ratio, right? We have our stop loss just below here. We have our target up here, right? And so this is a nice 3-to-1 ratio. You want to look for high ratio trades, right? At least a 2-to-1. Or, I mean, honestly, at least a 1-to-1, but the higher you can increase that, right? A 2-to-1 trade, a 3-to-1 trade, 4-to-1, the better odds of success, right, that you're going to have in the long run. So we can see here, we got a bullish engulfing, and we can play our trade to the next level, right? If we zoom in some more, we actually got a bearish engulfing right before that, right? And so we could have done the same exact thing. We got a bearish engulfing candlestick here, right near our 1 hour resistance level. And we could have taken the trade down to the next level, right? And close the trade once you hit your levels or once you hit your profit goal. And you can kind of continue to do this all throughout, right? And the cool thing, like I said about TradingView, is it has these candlestick patterns identified here for you. You don't always have to use them. You know, a lot of times it could be a lot of noise. So I personally don't keep it on the whole time. But if you take a look, you know, you can just work on becoming a level to level trader, right? And focusing on trading from one level to the next on smaller time frames. And what you can even do, right? If we go over here, you can see again, right? We're coming down near our major level. Okay, we're finding some support, and then we come up over here. We come up to our level up here. So, you know, you can just trade level to level. It works on the 5 minute, right? If we zoom out to the 1 hour, okay, you can also do it on the 1 hour chart. So as you see right here, we have this 1 hour support level, support resistance level down here. You can take a trade, right? Once we enter here, ride it up to the next, you know, level, okay? And just kind of continue to staircase it as we go up above. And it really helps you out just as a guideline, okay, to have all of this stuff together. You know, you see, we come down, we break our level, we get a retest, okay? So that's what it's called, a break and retest. Very common to see. So, you know, we have our move, you come down to the next level, take it to the next level, we get a break, a retest, and then you can take that trade down to your next level. And just continue this process over and over again, you know, from level up here to the next level, from level to level, from level to level, and it'll really help you guys out doing this, and you know, just charting from the higher time frames down to the smaller time frames, right? You can use this for swing trading as well, right? If we'll go to the daily chart and you want to do some swing trading, what do we see over here? We start to, you know, establish some support. We're bouncing off of a support level here. You can ride that momentum, okay, up to one of your next levels that you set as your goal, as your target, right? So if we come over here, and again, you know, we're using our stop or our ratio tool right here. Okay. And let's say we have a stop loss down at our next major support level. All right. And we're looking to take this trade up to, you know, one of the next 1 hour time frame resistance levels, or maybe even the next daily resistance level. Okay. So, you know, that's like a 4-to-1 ratio right here if you're targeting the next daily, because remember, the daily resistance levels and support levels are in yellow. So you can do that. Or you can look to just take profit at some of the, you know, the red lines, right, which are going to be your 1 hour time frame support and resistance levels. So it's a really useful tool once you start to get in the habit of charting support and resistance. There's no perfect way to do it, no right or wrong way. Like I said, you can use the wicks, you can use the bodies. I just prefer, you know, whatever has a lot of contact, right? Whether it's a wick, whether it's a you know, a body, or it's touching both of them, right? That's what I'm looking for. Is I'm looking for lots of areas of contact, lots of points of contact, and then you can use that to go ahead and give yourself you know, some levels to play off of, right? And look to become a level to level trader. It's very useful. Very useful, right? If you see here, remember our white is our weekly. So you see we're coming down to our weekly levels here. We're on the daily time frame, coming down to our weekly, and you can ride that up to the next weekly level, right? You don't have to just stick to each particular level, right? You know, you don't have to just trade it from here only to this one. You know, you can use some other things such as momentum, such as candlestick patterns, different types of things that you can use together to ride it to a particular support and resistance level that you're targeting. Okay, so that's it for today's video. Just wanted to kind of go over what support and resistance is, how to chart it up in, you know, some really efficient ways. You know, start off on the higher time frames. You can even start off on the monthly, work your way down to the weekly, to the daily, to the 4 hour, even to the 1 hour, to the 5 minute. You can go on and on and on. You don't want to clutter the chart too much, but when it comes down to, you know, really looking to do some level to level trading or scalping and things like this, you know, it's going to be really useful, and you'll see how much it respects your levels and how it trades in between them, right? It'll be, again, we're seeing here on the 5 minute chart, we're establishing some support at our level right here. We ride that up to the next one. We break through, we get a break, retest, and then we push up higher. You can take some profits here, right? And then we're trading back down. We're going back down to our previous level. We come back up again, we break, retest, go through, hit the next level, so on and so forth. So appreciate y'all watching this video. If you enjoyed it, if you want to learn more about the different candlestick patterns that I like, which ones I think works the best, in my opinion, go ahead and watch one of these 2 videos as well in my free trading course playlist. I got a free trading course that I'm putting together for 2023, and stay tuned to see as it develops more and more.